Part 2. Welcome, everybody. Come on in. We have Gary Black. We have Alexandra Merz back. We have new mics, everybody. Everyone's going to sound like podcast gods in this conversation, okay? So we're going to have a really good time. It's going to be an amazing discussion. So thank you all very much for joining us. In the comments section, do make sure you can see us okay, you can hear us okay. But yeah, thank you, Alexandra. Thank you, Gary. I really appreciate you guys coming back for a part 2 discussion.
Thanks, Farzad.
Great being here. Yeah.
Of
How
course.
is your mic, Gary? Give us a sentence.
My mic is great, booming from downtown Chicago, Illinois.
Beautiful.
There we
go. We even have a new background in the back. We don't have my little trading floor apparatus. It's actually got the Future Fund background. So
there we go. Perfect. We're getting so professional, Farzad.
It's like we know what we're doing.
Exactly.
Almost, yeah. Thank you guys very much. Maybe we'll start it off. Alexandra, you have some news to share with us this morning. Looks like had a...
So good surprise. Exactly. So I got up. I needed to get beautiful, right? I needed to get prepared technically. And that's the moment S&P decided they wanted to answer to my email. I mean, nobody expected them even to do something. So we just got an email from them, and I'm going to share it with you all. Give me a second. How does it work technically? Here I am. So I'm also gonna send it over to Twitter later on. So they answered at 5:30 their time, or whatever time it is, which is obviously quite surprising, or maybe that is 5:30 Pacific time. I'm trying to zoom in a little bit here. So this is a much less, then you can't see the boards anymore. This is a much more politically correct answer than what we got from Moody's. So he explained that they have already 3 times the last 12 months issued reports. They continue to believe in the company's potential for a further upgrade, as long as they see that they sustain the business and financial performance going forward, and that they have, of course, like Moody's had said, to consider quantitative and qualitative assessments. Gary will tell us straight away what he will like about that, because there is obviously no we're missing something statement in there. I just want to insist on one last thing. You all remember I sent both to S&P and Moody's my initial requests on August 26th. That was a Thursday. And Nishit obviously downloaded these 3 reports on the 29th, which was the Monday afterwards. Now we're the Wednesday, the week afterwards. So it took them 10 days to come up with these 10 lines, which is fair enough. But at least we got a response. So Gary, what do you think about that?
Well, look, I'll go back to Elon's comment back to you that Moody's is irrelevant, and what does that mean? You know, to me, they don't need any cash to grow. They're going to generate $10 billion of cash this year, free cash flow after capex, $20 billion next year, and I get $170 billion over the next 7 years. So they don't need to issue any debt. So you could say, just off the top of your head, Moody's is irrelevant. But I think more to the point, S&P always leads on Tesla, and I think they just have a better analyst. And so if we, based on what you showed last time, based on, I guess, that June podcast that they showed, they said, look, we have to have at least 18% EBITDA margins. No talk about, more products, just 18% EBITDA margins. Second quarter, I calculate auto EBITDA margins about 19.8. Third quarter, it's going to be about 21.5. So I think I'm still in the camp that come third quarter, if they can put up 21.5% auto EBITDA margins, then we get an upgrade. And I guess the question is, how big a deal is that? It's not as big a deal as S&P, including in the index, but it's a big deal because there are a lot of equity funds that can't own stocks where the debt is less than investment grade. So it almost stamps a blue chip status on Tesla. And I don't say that it legitimizes it, but it basically says, look, this is a high quality company and it's growing. So you're going to have a bigger universe of equity managers who could own the stock.
Yeah, I agree with you. I mean, people always underestimate actually 2 things. First is foundations, widow funds, often funds, foundations. They usually have investment grade obligations. And the other one is financial advisors. Financial advisors have lots of times in their mandate for the funds they have under management that it has to be investment grade, which is stupid because investment grade applies obviously to bonds rather than stocks. But that's just the way it is. So you're right. Pension funds, a couple of other institutions, insurance companies as well, but then also foundations and financial advisors. And I do believe there's also more and more really retail investors asking their financial advisors or asking their pension funds, why are you not yet in Tesla? And so the rating upgrade will give them cover to say, well, now they're upgraded, now we're going to go in there.
Yeah, and it'll be news when S&P leads. It'll make all the financial news shows. It'll make CNBC, just like when S&P added to the 500. And to your point, that's when you're going to have clients say to their financial advisor, I really want to own Tesla. They seem to be growing. The stock, goes up every year. And I think at that point, it becomes, again, almost like a blue chip type stock. I don't think it gets into the Dow Jones. People have asked me that, but I don't think it needs to. Dow Jones is not an index that people follow. So to me, that's not relevant. Going back to your charts, Alexandra, which you show, from a quantitative standpoint, there's no reason Tesla shouldn't be investment grade now. When you look at the two most important ratios and you worked at Moody's, it's debt to EBITDA and it's what we'll call fixed charge coverage. Debt to EBITDA, using your chart, Tesla's 0.5, which is extremely, extremely low. And if you look at interest coverage, and I just took my forecast for operating income divided by interest income, it's 81 times. So these are clearly much better than investment grade. And I think, again, the S&P is kind of on the hook to say, look, if we see 18% EBITDA margins, and that was back in June, we saw it in the second quarter, we'll see it again in the third quarter. I think it's going to be hard for them to just, not upgrade Tesla, given that they've kind of set the table for it.
Yeah, they did. I mean, last year, they were the first ones to upgrade them and give them positive outlook in October 21. Moody's followed in January. So just remember October, January. And I think the same will happen this year again. We'll have end of October S&P move after the Q3 earnings, if they're as good as we all expect. And then Moody's will have their winter sleep and then wake up in January.
Well, why does Moody's always seem to follow S&P, at least on Tesla?
And Moody's is, I've worked there for 6 years. Moody's is a slow company. Moody, I mean, just think about it. S&P this year probably will have about between 10 and 12 billion dollars of revenues. Why? Because they diversified very early. They diversified into indices, so they have the whole S&P indexes on which they have royalties, and they have much more data that they're selling than Moody's, and they're doing the ratings. But within S&P, while they're known for their ratings, the big money bringers are the indices and the data business. Moody's has just never caught up. And so Moody's, while they're still very profitable and they have $6.5 billion of sales, they never caught up to the numbers that S&P has. In profitability, both are incredible. They have about a 30% profit margin after taxes, but Moody's just always stayed the slower one, didn't go adventurous into other fields and just couldn't build it up. They're trying now with ESG. That's another subject. That's going to be my next topic but when I'm done with the credit ratings. But even in ESG, S&P had the lead. I mean, we know what happened in May when they ejected Tesla from the ESG 500 index, which was completely ridiculous. But you did see that had an impact on the market, while nobody talks about Moody's ESG's rating at the moment.
What I'm amazed is something you pointed out, that they embarrassed themselves almost by saying they have to expand their product line. And look, Tony Sakinaki from Bernstein, he's been on this kick, and he's short the stock. He's got to sell on the stock. But his view has always been, if you look at the industry, there are only two models out there, and it's the Toyota Corolla and it's the RAV4 that sell more than 1 million units a year. So that's 2 million. And look, Tesla has aspirations to get to 20 million by 2030. Even if you look at my quote unquote conservative model, I've got to getting to 10 million units by 2030. And by next year, 2023, the Model Y in my model, I have it 1.4 million. So it will pass both Corolla and RAV4 to become the best selling car in the world. So I guess, I don't know if Moody's is just copying Tony's line or what, but they're not looking at the trajectory of Model Y. And then you throw Model 3 on it, which will be, let's call it 700,000. And then you got a Cybertruck, which, look, there's no way that Cybertruck's not going to come. Cybertruck's coming. There's 1.3 million pre-orders. I've got 200,000 in my forecast for next year. That's how you get up to 2 million units right off the bat for next year. So I don't know where Moody's will recognize that they're wrong. That's why I asked you, do they just blindly follow S&P and make up some BS excuse, or do they just, to your point, go to sleep until January, and then I don't know, when Cybertruck becomes a real thing, then they go forward.
I mean, I obviously have no proof for that, but I also think there is lots of people that want to protect other people. When we look at that June Bloomberg video that I posted, I mean, my gosh, they're going out of the way to defend GM. They're going out of the way to defend Ford. You hear them passionately talk about it. You'd hear them passionately try to avoid the T word. I mean, just, don't say it until really you can't avoid it anymore. It gives me really a bitter feeling that they're not objective in here, that, obviously GM has many, for anybody really interested in, outstanding debt and how much GM and Ford pay to these rating agencies because they're issuing so much debt, they're then therefore paying so much rating fees, go at the end of that video, because Bloomberg prepared a lot of graphs showing, how their debt is structured over years, how much debt there is out there. And when you see how much debt GM and Ford have over the next coming 5 to 10 years, you understand they're just one of their best clients. There is no doubt about it. So they're not going to help Tesla with anything until it's just they're ridiculed so far that they have to do it. And that was my whole intention when I started, starting pressuring them.
What do you think about this idea that's out there that Tesla should just issue, make it up $2 or $3 billion of debt, because then they have to put a rating on the new debt and just get it out there, even though that would, they don't need the cash. What do you think about that idea? Is that a dumb idea?
I love that because it was mine. So obviously I love it. I mean, it was certainly not only mine, but I tried to push it everywhere. So what happened is I looked at Apple getting included. So Apple got investment grade in April 2013. And for a long time, they didn't. And obviously, Apple has the same product mix strategy like Tesla, few products, but so compelling that they dominate wherever they are. And so when I started looking at the Apple upgrade in April 2013, it became very clear. Actually, two things became very clear. One, that the institutionals much more heavily got into Apple, but also that the outstanding shares of Apple decreased. And so I did a couple of research, and very quickly, I mean, you don't need to be a genius to understand what Apple did. Apple issued debt, which got rated. So now S&P and Moody's were happy, gave them simultaneously on the same day AAA, right? From nothing to AAA. And from junk to AAA, because that was a good outstanding that, and used the entire amount they got from that bond issuance to retire stock, to buy back stock. And they kept on going, and they kept on going, and this is gaming them so bad, you have no idea. This is my daydream, I can tell you, because that is playing exactly against them. And fair enough, you give them their rating fees, because that's what the whole thing is. But afterwards, you use exactly that amount to pull back and buy back the exact same amount in stock. So that dries out the float, brings up the stock price, increases the P&E, that drives them crazy, and on you go. It's just, I love it. I absolutely love it. And I just hope somebody at Tesla listens and thinks, well, that's a cute idea.
See, I keep thinking that Zach and Elon will wait till they get the investment grade rating before they start buying back stock. And we can talk about that later. But the math, to your point, is very compelling. If Tesla's gonna earn, and I have it $8 now, this is split adjusted, $8 next year, and the stock's at 280, that's a 6% simple return. You got to think about it in terms of internal rate of return, like over 10 years or something. But even using next year's earnings, that's 6%. Their cost of debt is going to be less than 6%, right? So it's accretive, to your point, to do it. Borrow $2 billion just to get the investment grade rating, buy back stock, and it'll actually accrete to earnings by doing that in the first year. So it's not. I mean,
everybody will benefit, right? It's just it would for little cost, but I mean, obviously, it would take that Zach and Elon say, okay, let's game them, because you have to be the driver there. You have to accept that, fair enough, you'll have to pay that rating fee, but because you game them just after that. Or you sit it out, you become now, but because if they are just now normally upgraded, they will go from double B plus to triple B, right? They're not going to upgrade them to A without any rating fees. They're just going to do slow until, because that's the game. I mean, it's horrible. It's a horrible game. You can call it corruption or whatever you want. That's the whole game with those unsolicited ratings. But if you start playing with them and give them what they want, which is a check. I mean, obviously it's nicer packaged. It's data and it's communication and it's invites and meet the management and blah, blah. But once you're there, that's it. That's how it works.
Okay.
Yeah, what's surprising to me, I guess, from an outsider's view, this is not my world, but I find it to be very interesting to follow. It's just, I was surprised by both Moody's and S&P's response of qualitative measures instead of quantitative. And in my head, I'm like, okay, these companies are going to be about as mathematical as they come. How common is it for these sort of types of businesses to pull out the qualitative card and say, hey, this is why we think you're not in here, and basically just like, why even have quantitative measures at that point, right? So that's where my head goes.
I mean, and the funny thing is, when you heard the guy talk about why Ford is still junk rated, there he had all the quantitative issues. Right. Oh, I have a problem with this ratio, I have a problem with this ratio. Sure, you have, and you should, no doubt about it. But when it comes to Tesla, obviously on numbers, there was nothing to blame anymore. And then you pull the same they did for the ESG rating, right? Why for the ESG index ejection? Why did they eject Tesla from the ESG index? I did a whole video on it, but in short, it was because once the result was there, they didn't like it. And so they overlaid what they called the stakeholder and media analysis. Now, media analysis on Elon, I'm sure you find 50 reasons to downgrade them, right? Or to throw them out of an index. So it's just completely subjective. When you have nothing else, you pull one of those strings and say, well, it has to be qualitative, or it has to be stakeholders, or it has to be the media has to love them. And I mean, we can talk PR if you want to, but the media is not going to love Elon tomorrow.
Yeah. So basically, it's pulling the lever of whatever that, I guess, is it analyst specific, or is it like funds?
Oh,
like
no.
How much does the? Yeah. So it's a fund
I mean,
that kind of.
I was surprised. The answer of René Lipsch, the Moody's analyst, was so that was beginning of September, right? Was word by word really what he said in June. And in that Bloomberg video. So, and in that Bloomberg video, if you look at him, he actually stares at his screen and reads it. So that is the corporate message they put out in January, saying, okay, these are the 5 bullet points if somebody asks us why we're not upgrading them. And so what happens in rating committees is the lead analyst, in Moody's case, Lipsch, goes into that rating committee. It has to have his direct managing director in it. It should have other analysts in the car industry there as well. It could have more higher management. You never know who is there. And then the lead analyst brings his conclusion, and then they vote. And the majority wins. And if the vote is 50-50, the most senior person in the room cuts it. And then they decide on, how do we publicly promote this? What's the press release? And from there on, you stick to that. That's company policy, and that's it.
Got it. That's helpful to know.
So you're still October, Alexandra?
Yeah, I'm getting very precise. 27th or 28th of October.
Wow.
Ooh,
Good
nice.
for you.
Write it down, everybody. Write it down. Yeah, and I think it's also interesting from the sort of the recap the conversation is that it seems like Moody's is going to be under pressure to also move if S&P does move as well, just because of historical precedents, right? Because that's what they've done in the past. So that's going to be interesting to watch unfold. And sort of how is that going to change the dynamic of how? Because what's been interesting for me, again, as a layman person following the company for as long as I have, is that it seems like it's this combination of value and growth at the same time. And I wonder if once S&P and Moody's give them sort of that, like, hey, check mark, you guys are now, we view you as a company that's investment grade, super solid. You can bring a lot of value to stockholders. You're very profitable. Oh, and by the way, there's still potentially 50% year-over-year growth for the next few years. Like, I wonder, has the market ever seen something like that? I don't know if that's something either of you can answer.
Apple
but how
obviously
unique
was,
is it?
and Apple obviously was, and you're completely right. The rating agencies have big problems with growth companies. They don't grasp it. They don't get it. It doesn't correspond to them. I mean, go one day in front of the door of S&P or Moody's. Those are not the most, active people. They're not the hedge fund manager type, or they're not the Wall Street guys, the typical guys. So they have big problems grasping growth. And then once those growth companies get into the mega caps, well, they have to do something about it, but they're uncomfortable about it. There is no doubt about it. And finding this moment where it becomes institutionalized, where it becomes blue check mark, or where it becomes investment grade, well, like I said, look at Apple. Apple played the game. They told them, look, we're going to do a big bond issuance. How about you rate us? Surprise, surprise, what came out of it? Because there I can assure you, no quantitative element was ever looked at. Then they can just, no qualitative element was ever looked at. They just look at the numbers and said, oh, Apple is beautiful. Yes, it's AAA. And that's what would happen exactly with Tesla the same way.
Got it.
Yeah. When you read an analyst report, it's about a stock, they look forward. They look at this year's earnings, next year's earnings, even 2025 earnings. When you read a Moody's or S&P report, they're looking backward. And it's always, what happened last year, the last 12 months. So to your point, they can't handle growth because that's not how they're hardwired to look at companies.
Yeah.
So
yeah.
How did you get into growth stock, Gary? Was that something you always did?
Look,
I'm sorry, I know I shouldn't ask you a question.
That's all right. You can ask whatever you want. Look, people.
You all heard it. You all heard it.
People are either value investors or growth investors. It's just, look, you get hardwired for it. I think value investors start with something looks cheap, and then they try to find growthy companies within that cheap universe, where I look for companies that I think are going to disrupt the world, that are going to grow at least 10% revenues a year. And then I try to find if they're trading at a fair price. And, we can get into what, how do you define a fair price, but you can look at discounted cash flows. You can look at, go out to 2026 and then discount it back. But I try to find companies I like, that I like the products, that I know they're going to grow. And I don't want to buy them if they're below what I calculate, the present value. And it's just a difference of opinion. And I've told people, my old boss used to say, that growth investors are praying for no reversion to the mean, where value investors, they bank on reversion to the mean. They just assume there's going to be reversion to the mean. And I had a dinner last week with Rich Bazzino, who's a classic value manager. And look, that's how he looks at the world. And we had a big discussion about Tesla. And his big assumption is, well, even though Tesla has a huge advantage in technology, I was giving him grief because they just bought an Audi e-tron. I said, why'd you buy an Audi? He says, well, I liked it better. The looks were better. It was more luxurious, blah, blah, blah. I said, but the technology is nowhere near as good. And then he basically said to me, don't you think that Audi will fix that? I said, no, Tesla has a huge advantage. There's no way Audi's ever going to catch up to them on technology. Value managers just assume that there's going to be reversion to the mean. And something as quote unquote simple as technology, somebody like Audi can catch up. Well, Nokia never caught up to Apple when Apple introduced the iPhone. Sure. Why do you just presume that, VW and Ford and GM are going to quote unquote catch up to Tesla? That's just, to me, that's very naive. So I told him that. But Rich has he's got a great fund and he's got a great company, and they're now going private. So who might argue with him?
True.
That's really.
Yeah, go ahead.
Go ahead, Alexandra. No, go ahead.
No, I was thinking.
You're the guest of the week, really man. You're like blowing up everywhere. Yeah. So you go.
you're on fire, girl.
No, but doesn't that contradict your? And I'm sorry, I know I have the public with me on this question, so don't you go anywhere, Gary. Don't you think that contradicts your conservative stance of not accepting that FSD is just so much above all the Waymos and Cruises of this world?
Look, I'm not against FSD. I think FSD is a great product. I'm against adding incremental value for Robotaxi, where I put FSD into my model and I basically assume now $15,000, and I assume a take rate, and I've reduced my take rate now to 10%. It's right now globally, it's about 7% the take rate. The US is about 14. But when you raise the price up to 15,000, and it's not yet a level 4, what I'll call full self-driving FSD package, it's a driver assist package. I just don't believe people are going to pay $15,000 at that big a rate, number one. Number two, I don't know when it's going to get to full, we'll call level 4 Robotaxi type quality. It may get there, but it's not there today. So my conservative stance and valuation is not with FSD. I put it in there as a self-driving, a driver assist tool, an ADAS level 2 tool. but I don't want to go and say, let's say at $300 because they're going to have a robotaxi that's going to, take over the world, which is, I know what some analysts do. I can't model like that. So I know there's a lot of debate about it, but you got to remember that right now, Tesla's level 2, it's a driver assist package. It's the best one on the market. It's generalized, and it may get to level 4. And at that point, I would probably add some robotaxi valuation. But I have in there.
In one go? Do you mean that day would come and then you just cut it and the next morning it's in there?
Well, and look, there's a interview with the Baidu CEO, Robin Lee, who says automakers aren't going to ever go to level 3. They're going to be level 2, and then they're going to go to level 4. And he's got level 4. What is it called? The Apollo Go products all over China being tested. His view of the world is you got to choose what you're going to be. There is no level 3. So my I guess the question is, can you go from level 2 to level 3 to level 4 without changing the hardware? I don't know. And so because I don't know, I don't want to model it in. What I'm going to do for now, there you go. What I'm going to do for now is I'll build it into my base EV model, and I can take the take rate times the price and put that in and feel very comfortable with the valuation. And if they can add some value for robotaxi because they get there, so be it. My own view of the world, and I'm not a technology, analyst. My own view of the world is, the market seems to be segmenting into 2 segments. And again, Robin Lee will echo the same thing, that you've got, driver assist FSD, and you got auto, full self-driving, we'll call it AV level 4 type products. And the level 4 type products, they cost a little more. But if you look at their next generation, which is a R6 Apollo product, they say the cost of that's going to be $37,000 per vehicle. So it's not that much more to have the hardware needed to get to level 4 today. I think what's going to be the challenge is all these level 4, we'll call them AV products right now, are geofenced. And when you're trying to get a robo-taxi license, whether it be in China or the US, you apply in that state. So for instance, in California, to get a driverless permit, I think there's 7 that have been approved. You have to be level 4 in order for them to even give you a driverless permit. So the question is, can Tesla even get to level 4 with existing hardware? Maybe it can, but maybe it can't. I don't know. So I don't want to model in. Yeah.
I would like Farzad to explain to all of us, because he's done a really great video a couple of days ago on his. No, I loved it, Farzad. I mean, for me, this was the coming to Jesus moment, on how you think in the future this will play out.
Yeah, I think what's interesting about the whole autonomous future is that, so when I pulled up this one, right, when I pulled up Baidu's solution, right, so it's yeah, the way I view it is that it's an existing vehicle format, right? It has a hood, it has a trunk, so on and so forth. It's just been equipped with a bunch of hardware to allow it. And I'm assuming this is geofence. It's probably, they're going to only scale it if they feel like they have the entire area mapped out, right? So it's very strategic, and
it's ugly too.
Sure. Yeah, it's not the prettiest thing in the world. But one could argue too that if you're in an autonomous vehicle, like how it looks is probably not really, like, who cares? It's going to be a fraction of the cost. Right, exactly. But I do think within that context, the way I view Tesla is that I think Tesla is best equipped to release an autonomous vehicle, say, ecosystem that's going to be optimized for it to be autonomous. So what I mean by this is Tesla, the way I view Tesla getting into this, say, robotaxi autonomous vehicle future, it's not necessarily leveraging their existing fleet of cars and giving them level 4 or 5. It's them being able to essentially follow something similar to the airline model, where Tesla creates these shells of robotaxis that have the drivetrains and the wheels and the batteries and a shell, and it's outfitted with the safety features, maybe a few screens or so, whatever. But it's optimized for it to be a robotaxi, right? So you don't have a hood, you don't have a trunk per se. The seating within the vehicle or the autonomous vehicle can be configured, but then instead of Tesla taking on the responsibility to do that, they essentially sell these to, say, fleet operators. So in an airline industry would be like a United or an American Airlines or a Spirit, and then these folks can decide how to outfit the entire interior of it, and that way Tesla can just mass manufacture these very specific type of solutions for the autonomous vehicle, and then the fleet operators can decide to customize it.
But Farzad, isn't that the form? That's the form function. Where when I talk to institutional managers who think like I do, that I'm not going to include a Robotaxi valuation, they're focused on the substance. That today you don't Tesla can't be rated level 4 and even to be given a driverless permit. So how do you get from where you are today, which is a driver assist product, and everybody says that's what it is, to level 4 where the product drives itself, whether it's geofenced or not? How do you get there without, and I don't want to use LiDAR because that's like a third rail, but without increasing the amount of hardware in the product from where it is?
Yeah,
today?
so
How do you get there?
That's a great question. So, I mean, based on the research that I've done, so again, this is just me speaking to people that I view are trustworthy and are experts in their fields. So, for example, like a James Dama as an example, he's been very adamant about just the current hardware does it. Elon Musk himself has said that the current hardware will get us there. And I think Tesla has a track record of when they set these grand goals and grand visions around trying to execute against something, they achieve it. So perhaps I'm biasing a little bit too much towards that. Plus, I was at the company for 4 years and I saw the impossible being made every freaking day, right? So maybe I have a bias towards that and I'm giving too much weight to that. But that's how I come to it. Elon says we have the hardware to do it. And even if they don't, like say even for a Robotaxi feature, they have to add 2 more cameras. Maybe they need to move the P-pillar forward and add another set of cameras on the sides. Okay, they do that. And that's it. And now they have the manufacturing expertise to crank out God knows how many millions of units of these Robotaxis out. They're going to be very simple. They're going to outsource the fleet operation to somebody else and they get it done. So I think the operational execution of the company in this regard, I think is going to set them apart versus everybody else because it's just, and you think about their strategy that they're taking today with full self-driving as well. If they do solve it, their scalability is going to be orders of magnitude greater than anybody else because it's a solution that should apply everywhere versus something like LiDAR. You have to map out the geofenced area. And that's why, so when I pulled up the article that you didn't share the article, but you talked about the company, as of August 30th, they have 1 million EV autonomous ride, right? So 1 million miles. 1 million EV autonomous ride milestone. I don't know if that's miles or what, or 1 million rides.
I think it's miles.
I think a million ride. Yeah.
Miles.
Could be short
but
ride,
compare
could
that
be long ride.
Right, but compare that to
right.
Tesla, they're in the billions, right? So that in itself tells me that if they're able to pull the lever and execute, now they can scale way faster than anybody else.
But Farzad, just listen to you. You keep saying if they can do this, if they can do this.
Yeah, that's fair.
And it's like that's what drives me crazy with the Uber bulls. It's like if they can get there, Elon's been promising by the end of next year for at least 5 or 6 years it'll be self-driving, and so it I don't say it bugs me, but it frustrates.
It can bug you.
me
That's okay. I completely get it.
It's like Rich Messina assuming that the Audi's just going to get the technology. You're just assuming they're going to get there without any proof that they can get there.
Yeah,
but
the same way they landed rockets, right? At one point they'll get there.
Right.
I guess. And then the question is, though, do they get there when everybody else gets there? And then you get to this debate about geofence versus generalized solution. I agree with you. Tesla seems to have the best shot because it's a generalized go everywhere solution. But when you look at these states like California, they regulate for their area, and the same thing in China, based on you have to be level 4 in order to get a driverless permit. You can't do it from level 2. So the question is, when do they get to level 4? Is it 2024? Is it 2025? Versus these guys who are geofenced today, but they're already at level 4, right? Because they've already invested in the ugly hardware that sits on the top of the car. And that's where, look, as an analyst, you got to be true. You got to be true to yourself when you look in the mirror, and you can't be adding value to your price target if you really don't know when they're going to get there. I can't just assume it. Let's put it that way.
No. And I agree that. And I actually like that because, you have my money as well. So I rather be a little bit more conservative and have conscious of the fiduciary risk, which is one of the things I sometimes, don't appreciate with some of your competitors. And that should actually bring us back to your spreadsheet. You kindly sent it to me yesterday, so I'm going to share it. Give me just a second.
Here
No,
we
because
go.
I got a couple of questions, and I also
Here
think
comes
that
the interrogator.
nah,
That's okay. You can do that. I gave you permission.
thank you. Oh, that's so kind of you. Just a second.
Gary, FYI, I agree with your sentiment. I think from your perspective, it makes a ton of sense. I bias towards Tesla's ability to execute long term against these grand visions, and because I've seen it happen many times before, and I think that's what gives me the advantage as a retail investor to capitalize on these things. If it doesn't work out, then I'm going to be in a much worse spot than I am today. But I feel like I have enough proof. It's kind of like a qualitative approach, like Moody's and S&P are taking on Tesla's credit rating. I'm taking qualitative approach on Tesla being able to execute FSD.
And look, it's almost like it's a free option. It's a free option. I can justify a $550 price target without Robotaxi. So if it happens, it's worth even more.
Right.
Good. So that brings me to your table. So I tried to understand yesterday. So on the left, you've got the years up to 2030. The first column, if I got it right, is global automobile sales, right? In millions.
I'm going to try to read this while you're doing this. Yep.
But it's your table, so.
I know, but it's hard to see on the screen. But okay, I see it.
You don't have it memorized, Gary?
You okay?
I know it.
Then you got the EV adoption rate, right?
Yeah.
Up to, okay. That brings you to the global EV volumes, correct?
Correct.
And then you have a Tesla share, which this year should be just below 20% and then stabilize at 20%.
Correct. And this is the iPhone model. It's the same. iPhone was in the smartphone category, and they kept their share of smartphone pretty stable over the years. And it's about 20%. And this is the same model that when you think about iPhone, the smartphones, basically took over the world from we'll call them the feature phones or flip phones. Mm-hmm. And then they, kept their share pretty even within smartphones.
Okay, perfect. So then those 20% you apply to the global EV volume, that gives you Tesla's percentages, right? So
correct.
Exactly, perfect. And then you have thousands of deliveries. So for this year, you expect 1.41 million, correct?
Correct. And yes.
And then average selling price of 55,700. Correct. And then a gross margin for the automobile sector for Tesla of close to 29%.
Ex regulatory credits. I back out the regulatory credits because they're going to go away at some point.
Got that. Operating margin of 17.7.
Mm-hmm.
And then this is what, 15.5 billion of cash?
No, adjusted net income. So
adjusted it, yeah.
The earnings per share, adjusted, we'll call it non-GAAP earnings per share, where you add back the stock-based comp. So for this year, meaning 2022, I've got adjusted earnings of 440, and off to the right, you can see where consensus is. So consensus for this year right now is at 414, and the big difference is the volumes. The street's at 1.357 deliveries, and I'm at 1.4, because I'm assuming both third and fourth quarter are going to be big quarters as Berlin and Austin. And look, China is now putting out at, I think it's like 21,000 a week. They're up to 1 million capacity now, the Shanghai factory with the upgrades. So where I think there's going to be huge, we'll call it beats, is third and fourth quarter. Fourth quarter more than third quarter, because the volumes are just starting to explode. And that really becomes apparent in 2023. We're going through that same process you just went through. I've got 2.4 million units because I've got Berlin and Austin really coming on stream. I know Elon has predicted 5,000 a week by the end of the year. I've got 3,000 by the end of the year. But then when you go all the way over, the street's at 2 million. And I don't know if it's because they're just not assuming much Cybertruck, or they're just assuming that, Berlin and Austin continue to lag. But I've got $8 in earnings for next year, and the street's at 583. So when people say you're being really conservative, the only place they could say I'm being conservative, I think, is on the auto gross margin. And we've had a little debate in the last couple of days. Some people saying that number is going to be much higher. It's possible. I'm just looking at the two factories, and they're at 25% of capacity right now. So it's hard for me, and these are the quote unquote money furnaces that Elon talked about. It's hard for me to get my margins anywhere near 35, 40% with those two factories still operating at 25% of capacity. So I don't think I'm being too conservative. Again, if I look at my numbers versus the street, I'm at $8 versus 583. If they were ranking me, I'd be up near the very top in terms of earnings. But I know there's
Yeah,
some
but you're
people
talking to us, so
I know.
compared
You
to
know
all
what's
of us.
funny? I'm looking at my model, and he's got more deliveries. Gary's got more deliveries than I do through 2025. So
Yeah.
don't call him conservative.
Yeah, it's
I'm more
the auto
conservative
gross
than Gary.
margin where, I may be conservative. If I look at my numbers versus the street's at about the same as I am on auto gross margin. And again, I back out the reg credits. So I don't know, maybe some people are including the reg credits in there. I just assume they're going to go away as everybody else now has EVs. They don't need to buy the reg credits as much.
Let me ask you a question. So these percentage numbers in this column of deliveries, thousands of deliveries. So this year 1.4 million, next year 2.4. These are the percentage increases. So you believe next year with the ramp of the two companies, they are able to increase it by 70%, but then it goes down to as low as 29%, and your average, if I got it right, is 44%, right?
Right. So it's the law of large numbers. So look at that second column. EV adoption this year will be 10%. And so I've got it, and this is the investment thesis on Tesla, that as EV adoption grows from 10% this year to about 30% globally by 2025, and I do it by region. So you got China, you got Europe, you got the US, and you got all the others. That's about a 44% growth rate. The investment thesis is column 4, which is Tesla can hold its EV share. Okay. And that's what Apple did with iPhone because they can outrun the competition. I think the bears, and maybe this is Moody's as well, but the value guys and the bears will say that's nonsense. As everybody else launches their own EVs, Tesla's EV share is going to fall. And so some people point to the second quarter. The number in the second quarter for EV share was about 16.5. But remember, China was closed because of COVID. So when you add that back, and I had this discussion with Rich at dinner, I said, when you add that back, second quarter EV share was about 20%. When you add back it was like 80,000 of lost volume in the second quarter because the China factory was closed. So I still believe as long as you can keep track of this number, and it's pretty easy to keep track of the number, as long as Tesla can keep their EV share at about 20 by innovating, and more importantly, they have to keep adding factories. So we need to see that they're adding another factory, whether it be in the UK or in Canada or in Indonesia. They got to have at least a factory or so a year to get to 10 to 12 factories, which is what Elon promised by 2030. And again, what Elon has said, 20 million units by 2030. Look at my number, which is column 6.
10.
I'm at 10.8.
10.8. Yeah.
Because that's 1.1 million per factory. Elon's saying 10 to 12 factories, 20 million. That's 2 million EVs per factory, which is huge. So I just think that's being a little aggressive. And I know he says that's aspirational. That's the word he uses. I just think those two things need to happen. EV adoption needs to keep growing at the rate it's growing. And I'm pretty confident of that. What I'm not as confident about is Tesla needs to keep adding factories at 1 to 2 every 2 years to get the capacity up so that they can actually get to that number by 2030.
So would an expansion of Shanghai, meaning, and I think Shanghai we're limited in space, but especially in Austin, we can still add 3 or 4, even more times the same thing. Would that satisfy your need for that? Because I just think logistically, it's much easier to double, triple, or quadruple a site that you already have than now suddenly go into the next state and start all over again.
It is. And if they'll do that, I'm fine. I don't care. I'm okay if they just triple the size of Shanghai or triple the size of Austin, which they have the space to do. Obviously, there's no room in Fremont to do that. But I do think from a logistics standpoint, there needs to be something in the eastern United States, whether it be Toronto or, it's called Kentucky or Pennsylvania. And there needs to be something in the UK, on I guess we'll call it the western side of Europe. And then I think there needs to be something over near India, Indonesia, Thailand, that area. So I can see those as the low hanging fruit in terms of getting new factories up and running. I think back to your original question, why is the growth rate slow so much, is because once you get to 30% EV adoption, so look at 2025 versus 2030, going from 30% to 60%, if you were to calculate the compound growth rate of that, it's not that big, right? Because you're getting a big number. You're basically, going from 10 to 30 is a triple. Going from 30 to 60 is only a double, so the compound growth rate is going to be lower. So I don't want to assume.
What you're doing is you give them the credit the next 2 or 3 years that they will grow as they promise, but then you slow them down. I think you just have a doubt that they might get really to 20 million by 2030, and that's why your growth rates here at the I'm not in the right here of 29% and 24% gets so much lower, right? Just because you think there won't be enough factories to really build 20 million cars.
Well, here's the math. Look at that EV adoption, because that's the key assumption. From 2022, I go from 10 to 30, okay, in 3 years. That's a 44% growth rate. Just take my word for it. If you punch that in. Going from 30 to 60, 25 to 30, doubling. That's a double over 5 years. That's only a 15% growth rate. So the problem is you can't just keep assuming that Tesla's going to grow its EV share. That's why the growth rate has to slow, unless you want to assume they, you could say the industry is going to go to 90% EV adoption by 2030, and you may be right,
But don't you feel bad giving them so little PEs? I mean, I know now where it comes from, but I just find it absolutely ridiculous imagining that in 4 years, Tesla would trade at a PE of 13.
That's my bull case, Alexandra. So I'm not saying that they're only going to trade at 13 times. I'm just saying if the stock price stayed at 275, they outgrow the multiple.
Oh, I see.
And so the right way to think about this is go to 2026, let's call it, and say, if they're growing at, let's say, 20% a year, what should the multiple be in 2026? And I would argue with a 20% growth rate, you may say that's too low, but let's suppose it's 20, they should get a multiple of at least 40 in 2026. Exactly. So 40 times 2067, assuming my earnings number's right.
Okay, got it.
That's it. And then you have to discount it back at some, cost of equity reflecting Tesla's beta. And this is where people get a little sideways with it. There's an interest rate, and the interest rate keeps going up, right? Because the Fed is tightening. Yeah. So now I'm using a 3% 10-year rate. There's what they call an equity risk premium. So how much do equities in general return versus bonds? And over the last 60 years, it's been 6%. But then you got to multiply that times the beta. And Tesla has a 1.6.
1.6.
You have to adjust it for the riskiness. So the discount rate that I use for Tesla, which people give me a hard time for because I use a high number, it's 12.6%.
Yeah.
The 3.
It's severe. It is really severe what you're doing.
Yeah. Right. Severe. Okay, that's a nice way to put it. But that's the way, financial people look at things. You have to risk adjust things. So even if I do that, I'm still getting a $550 price target. So go to the street. The street is only using 892 by 2026 off of Bloomberg. I'm at 2067. And I get that, people say, well, you're too conservative because you're not including any earnings for Robotaxi or insurance or this and that. A fair point. But I'm so far ahead of the street that if my numbers are right, the stock is going to be double, where it is today, if my numbers are right. And so a lot of people say,
and yours is a 6 to 12 months horizon, right?
So that's the way price targets are. When somebody says to an analyst, and I grew up as a research analyst, what is your price target? You're coming up with a valuation, assuming markets are going to be efficient, and figure out what within 6 to 12 months. So when people say, well, you've already been at 550, again, it's a split adjusted number for 6 months or 3 months. Now you only have 3 months left, so you should be raising your price target. I say that's not the way price targets work. Price targets are there's a present value based on some future value discounted back, and the assumption in an efficient market is the market will figure out what within 6 to 12 months. So that's how you come up with a price target. Okay, and that's the easiest way I can explain it. It doesn't mean that I'm smarter than the market. It just means I'm looking for market inefficiencies, and I think here's where the market inefficiency is on Tesla. EV adoption is going to grow much faster than everybody thinks. And Tesla is going to be able to hold its EV share. And therefore, 20%. It's going to earn twice as much as what the street is at in 2026. And that's the market efficiency. But the market will figure that out over the next 6 to 12 months. And that's why I have a price target over 6 to 12 months. Does that make sense?
Love it. Yeah, it does. Now, that brings us to our headwinds. Hope we're not losing.
Can I ask a quick question, Alexandra, just real quick?
Ahead.
So what kind of signals, I'm just curious, because the way I view 20 million in 2030 is that, so that chart was very helpful for me to sort of put within my own brain how I think about 20 million is that Tesla's entrance in the robotaxi market and the way that I described it, I think it's the lever they pull to really get their units up to that, because I view it as a way of just completely, 2030 is 8 years from now. And what I've seen from the company is that these folks are thinking 5-10 years ahead to try and reshape what the market's going to look like. So I think that's how they get to 20 million, is by introducing a brand new a product that's going to address a brand new market. But I'm curious, from your standpoint, Gary, what would you look for to see if you can get to 20 million from your perspective? Like, are you looking for anything specific?
Well, I'm looking for them to hold their EV share, number one, which I think they can, as long as they keep innovating. And Cybertruck is going to help a lot, because I always go back to TAM. With Model Y, they went into a category, CUVs, which is 40% of the market. So while a lot of Tesla, remember the bears were saying Model Y is not going to do much of anything, they basically tripled their TAM when they introduced Model Y. Now with Cybertruck, pickups are about 18% of the market. If you look at the TAM, according to Wards and others, that's going to be a huge increase. I mean, not as big as Model Y, but it's a huge increase in TAM. The other big missing link, it's not semi. Semi is going to be a limited volume. Is we'll call it the $30,000 to $35,000 segment, which Tesla doesn't compete in. And I understand people say, look, they don't have the capacity right now. That's why I don't assume anything in my model until 2024 with that. But that's the next big piece that expands the TAM. And while it will cannibalize Model 3 a little bit when they introduce it, it's something they have to go in if they want to continue to keep their share, because that's where everybody else is going to go. They're all going to bring out $30,000 to $35,000 EVs. So hopefully I need to see that. And I need to see that they keep adding capacity at the rate of 1 to 2 factories every couple of years. And if that happens, they're golden.
Yeah.
That's why it's our largest position. And look, we believe what you said, as far as that, they've shown an uncanny ability to execute, whereas the rest of the industry has not, and produce at scale. As Elon said, prototypes are easy, manufacturing's hard. They have shown that they can execute. All they got to do is execute. All they got to do is open more factories and get the product lineup that they've already announced. So Cybertruck next year, and we'll call it the $30,000 to $35,000 compact by 2024, 2025, and they should be able to hit that $10 million unit number by 2030 that I have.
Yeah, no, that's helpful.
While we're talking, go ahead.
Go ahead.
No, go ahead.
Please.
No,
No,
while we're
you're the rock
talking
star.
Model Y, I just want to give a shout out to that new security safety rating that they got last night, because what really saddens me is that this will end up nowhere. I don't want to talk much PR today, but I just would like Fazad's and yours input on, how can we make sure that people pick up of that? How can we ensure people understand this is not just the most, the best technology car and whatever, it's also the safest car?
Look, that's the thing that I think Tesla has done a poor job on, is they just rely on Twitter to get the word out. And when you think about a brand, brands are made up of different, what we call brand equities. And I used to be a product manager in an old life, so I'll talk a little brand speak. But the Tesla brand, as far as I could tell, is about range. I mean, that's the reason people first started buying Tesla. They had the best range. It's about the power and the performance. It's about the technology. They have the best technology. And to me, it's about safety. And if you think about those 4 elements, and you could say charging stations and stuff like that, but the one that's missing is safety. And safety is going to become probably the most important brand equity as self-driving becomes, more common. Tesla needs to do a much better job, and it could be through PR, it could be through advertising, of getting the word out that they are the safest cars on the planet. And they don't do that now. They're just assuming, if there's some report out there, that everybody's going to read it, and that's just like, even the thing that you saw last night, there's a pretty little chart somewhere, but you got to find it. And marketing is all about taking complex numbers and data and simplifying it and spoon feeding it to consumers so they know it. And that's not something Tesla does. And I think, again, it's an engineering run company. They just assume the market's going to figure it out. The market doesn't just figure it out. And when people say, okay, well, the media is biased and the media is always running negative stories, it's coming from competitors, because you got PR departments at Ford and GM who spend all day calling up the press saying, hey, did you see this negative video of the Tesla FSD running into a dummy or something, they feed the press those negative stories. It's not like the press comes up with it on their own. So there needs to be something to fight back with, and it could be PR, it could be advertising, to say, look, this is how safe our cars are. They're the safest cars on the planet. Here's why. And to do it in such a way that the average consumer gets it within about 13 seconds. So.
Pause
That's
it.
interesting. No, yeah, I was going to say, I mean, I think I pulled up something on the screen here, which was, it's something came up on my feed on YouTube where it was a motorcycle Tesla. It was a motorcycle channel that was sort of talking about how Tesla Autopilot crashes into motorcycles, right? Why? And it's got 500,000 views, right? But when you look at the when you view the video, it's not explicitly clear that the people that were driving the cars, like this is around safety, right? But towards other people, that people driving the car wasn't necessarily using autopilot or say full self-driving. It was kind of vague in its thing. But I think it's interesting what Gary brings up, because it would help. When I think about the other 50% of the population that doesn't even have access to a Tesla today, but will have access to a Tesla in the future, I'm curious how the adoption of EVs is going to influence their sort of like their viewpoint in purchasing a Tesla, say 10 years down the road. But then what's interesting about that concept is if we think about autonomous vehicles in the future. And again, my assumption is that within 5 to 10 years, we're going to have potentially very different world when it comes to going from point A to point B. We're going to have much, much, much cheaper solutions available for us to take, especially in city centers. I wonder just how much of that becomes a non-issue, because you're just going to get into an autonomous vehicle and go to where you need to go when you're that 50% of the population doesn't have access to a Tesla today that's viewing that video, right? So does it become irrelevant in the long term? Yep.
And it gets even more political.
I
don't know whether you've seen ex-President Trump talk about it in his rally now, screaming about electric cars and whatever. So this gets much more public attention than it should. And there's just nothing on the other side. And this morning, Al Root, the Dow Jones Barron's journalist, tweeted, "This is the moment for Tesla to have PR and make their message heard." And he's completely right. This is exactly the moment where there's just nobody again. And it drives me really insane. Now, that brings me to a question I had. What, if ever something keeps you up concerning Tesla, both Farzad and Gary, if it keeps you up at night, what is your biggest beef with Tesla? What is the one thing where you just can't get through to have a satisfactory answer?
Well, that you just hit it. It's they need to do a better job of communicating how safe Tesla cars are. The three of us, and anybody listening to this call, probably know that Teslas are the safest products on the market. And yet the average person out there who's a first-time buyer of an EV does not know that. And Tesla has to get that. And there's this, and I'll call it misperception, that because Tesla doesn't advertise, that's why the media hates them. That's BS. That's not the reason. The reason that you see this is that this animosity toward Tesla is, one, when you put Tesla in a title, the paid clicks are 5 times as much as if you put GM or Ford in there. That's just the way it is. Okay. 2, because Ford and GM and Volkswagen all have big PR departments, and they're constantly calling up and doing their job and saying, "Hey, you should write this negative article about Tesla." And the journalist says, "I should, because my editor keeps saying I should write more articles about Tesla." Call Al Root. I know Al very well, and he's very pro-Tesla. He will tell you that his editors want him to write more about Tesla because you're going to get a lot of paid clicks. So Tesla has to understand it's not because they don't advertise that there's negative articles. It's just because when it goes into the title and it says Tesla, especially if it's negative, people are going to click it. And therefore, the system is set up that they like having negative articles about Tesla. But it's not because they don't advertise. That's just stupid. Okay. So my biggest bitch is that they've got to communicate better and stop relying on people to find things on their website. They have to, even if it costs them a couple $1 million a year, to spoon feed out things that show Tesla is the safest car on the planet. That's what they need to do for the next 5 or 6 years. And they're not doing it today. And that's a challenge. That's my biggest beef.
What keeps you up, Farzad?
Yeah, for me, I mean, I think, so speaking with you, Alexandra, and obviously hearing Gary's sort of viewpoint from the PR side, like, I'm starting to really, I was on the camp of like, definitely they don't need PR. They're very successful already how they are, but I'm getting warmed up to the thought in the future, but that doesn't really keep me up at night because I view that as, I'm trying to put it within the context of like, say 2 to 5 years, right? Within 2 to 5 years, I still believe that Tesla is going to be so well positioned from a market perspective, and they're going to have the best product, and they're going to have the biggest scale, and they're going to be able to execute at the highest level, that I still feel like it's going to be a non-issue at that point. What for me, Elon's health is by far number one.
Yeah.
So ensuring that he's at the company for as long as humanly possible is what keeps me. And what's interesting about that equation is the longer Elon's at the company, the less that risk becomes, because the company becomes bigger. He has the ability to pass on his knowledge and build out his leadership. He becomes less and less a part of the company as a percentage of the total staff, just because of the sheer size of the damn thing, right? So the risk comes down. So that's what I think about. And so it's like, going out and getting some sun, doing some exercise, taking care of himself, not working himself to death, preventing any sort of heart attacks. I want the guy to be around for a while, just for him as a person, like a human being.
Yeah.
So, but that's what I think about, is like, I would love for Elon to be healthy so that he's able to achieve what he needs to achieve, that he wants to achieve.
I think that I think that's 100% correct. And so if you say, what do you worry about long term? That is definitely it. He needs to have a management team so that he can step away from the day to day, to your point, and say, these are the folks who are going to run, the men and women who are going to run Tesla going forward. He has not done that. And so when somebody says, well, why do institutions not own Tesla at the same rate that they own Google or Amazon or Apple? It's nowhere near it. It's 44% of Tesla's owned by institutions, the shares. And even if you look at the float, it's like only 53%, whereas those others are at 80%. I think that what you just said, Farzad, is the number one reason why institutions are afraid of Tesla, because there's this key man risk. And, I asked him the question at the annual meeting, and, he made this joke about the aliens and, they're going to come and take me way back to Mars and stuff. But institutions worry about that. And I think he's got to do a better job. And I'm sure the board is all over him to do this, of appointing a number 2 and a number 3 and saying there's a management team. There's nothing wrong with him stepping aside and doing what Steve Jobs did and said, look, I'm going to focus on what I love. I love product. I love the manufacturing process, and that's what I'm going to focus on. Give himself a name and let somebody else be CEO of the company. I'm sure he hates being CEO. I was a CEO. It's a thankless job.
He's openly said it, that he hates it.
It's a terrible job. People come into your office and they complain all the time that, about this, that, and the other thing. It's not a fun job. It's an administrative job. Whereas what he loves and he's great at is product, and that's really what he needs to focus. So to your point, you're right. He needs to have a strong number 2, so that, and again, this is from an institutional standpoint, if he ever got hit by the proverbial bus, the company doesn't go down by a third the next day.
Now, I have what keeps me up at night, and I was thinking whether I should share this, but I thought, what the heck, let's do this, because this is really something that people probably don't know. No, it's not that big. Don't do that. But what really keeps me up is I find that retail investors are not represented right in this whole story. I'm not always sure Elon wants the stock to go up for whatever reason there is. And I hear that from quite a lot of people thinking, oh my God, here he tweets again against this or against that. And it may actually have a sense, that he doesn't want the stock to rise a lot, because that would mean employees would leave because now they're rich and don't need to work anymore. Look at Farzad. And
I knew that was going to be a dig.
Or whatever. And I just feel there is little understanding what retail investors need. I hear from people that are retired and are relying now on Tesla because they believe in the company and have invested there, and they can take it for a while, but they can't take a long suppressed stock price forever. And I just don't think there's anybody out there. I know we have Martin talking to institutional investors and he's doing investor relations, but I don't think there is anybody in that structure who considers, what comes from retail investor. It all happens on Twitter, which has a lot of advantages, but also a lot of noise and a lot of things that just get forgotten half an hour later. And what I would wish is that when they increase their board, they have somebody up there that has that role to represent and listen to retail investors, to discuss that, and to have Elon's ear to also hear that version, because I think that just gets completely lost in the story.
I agree with that. I agree with that, because you don't see that on that board today.
No.
So
One of the things that was brought up about institutional ownership, and how him putting sort of a second like the next man up or the next woman up to take over the company. I'm wondering if I circle back to what we were started talking about, which is Moody's and S&P, or S&P moving first and then Moody's moving second. How much of a material impact do you think that's going to make from an institutional investment perspective?
yeah.
It clearly will. Sorry, excuse me. It clearly will. Look at the Apple numbers. I mean, if that would be coming parallel to a buyback, and then a good CEO type person helping him as number two, that's ideal.
Yeah, I agree with that. And look, the ideal person is somebody, I would say, who shares Elon's vision and values. So it would probably be an engineer or product person. I wouldn't go out and hire, some salesy guy, because that person probably wouldn't fit within the Tesla culture, or woman. To me, you got to have a strong, it doesn't have to be a number two, but it's got to be a team that people can look to and say, if Elon could not run the company, here's who would run it, and people would feel comfortable. That's probably the number one thing that institutions need. Number two, I think you're right, Alexandra. I think having an investment grade rating would help. Number three, people do worry about the valuation. There's nothing you can do about it. But when I talk to institutions, a lot of times people point to its high valuation. I think the cash. We haven't talked about this, but the cash redeployment. What are you going to do with the cash? People have seen kind of I won't call them dumb decisions, but when they go out and they buy a Bitcoin, or they use the cash for things that are not the way institutions think. And institutions love if you redeploy the cash back into gigafactories. That's the best use of the cash. But don't let the cash build up at 2%, and don't go out and buy restaurants, and don't stick it into hobbies like Bitcoin. Can you imagine the outcry if, rather than Elon buying Twitter, Tesla had made a bid for Twitter? That would have caused so many institutions to rebel. Thank God that's not what he did. He's buying it with his own cash, and that's why it's hard for me to kind of fault him on this. If he wants to do something crazy like buy Twitter with his own cash, that's fine. I just don't want Tesla using its cash to buy something silly.
So explain me where we are with Twitter, Gary, because I don't even have the time to catch up anymore. So why are we now back to Delaware? Weren't we supposed to be in Delaware in a couple of weeks only? Why is there something else going on now?
Yeah. So this morning, just to catch everybody up, Judge McCormick allowed Elon's team to add Peter Zatko, Mudge, they call him, his complaint, which he filed with the SEC. That's been allowed to be added to Elon's counterclaim, why he should be allowed to walk back out of the deal. And that's a positive. That's something that Elon had asked for. And we felt that was going to happen because this judge, who's very efficient, no nonsense.
Sorry, Gary, to clarify, this was the gentleman that worked at Twitter before that was in charge of
he was
security,
the head of security, right? Correct.
Yep.
And we expect this to happen because the judge doesn't want this to be appealed. And basically, if they hadn't allowed it, and you're supposed to in Delaware court allow somebody to add to their claim if they want to. There's supposed to be a very easy process for doing that. I think the judge probably figured that Elon's legal team would go through an interlocutory appeal, so go to the next higher court to basically stop the process and get this person added. So I think smartly she allowed him to add it, but she also did what I thought, which was she's not pushing back the trial. And if you listen to the hearing yesterday, they combined the two, saying we need to add this person to the claim and we want to push back the trial to November. And the judge said no. The judge says, nope, we're going to start October 17th. There's still a couple rulings out there which are going to come out probably by Friday. One is whether Elon's personal emails, both at Tesla and SpaceX, that pertain to Twitter can be introduced in discovery. And I think she'll say yes, based on the discussions. And then perhaps more importantly, the text between Elon and Jared Birchall, who's his private wealth advisor. He runs his family office, if they pertain to Twitter. And he's known as the person who came up with, maybe not came up with the idea. I'm sure Elon came up with the idea, but he's the one who's been running the deal. Can his text be introduced? And I think, again, the judge will probably allow that. And people say, well, that's a violation of client-attorney privilege. Birchall's not an attorney. He's a wealth advisor. So she could definitely allow it. So you still have this overhang, and people, give me grief for talking about the overhang all the time, but it's out there and it's true. And so when you have the trial start on October 17th, the worry is if they lose, will Elon have to come up with even more equity if he has to basically carry through on the 54.20 price that he agreed to? And the answer is he does, but it's not a lot. He's already raised $15 billion of equity. Assuming the third-party equity investors, which is about $7 billion, are still in the game, and assuming he still has all his bank commitments, Elon will only have to come up with about $2 billion. So the true overhang, which is him having to raise money, is not that great. I think people are just worried that he's going to be spending way too much time. And look, think about Elon's businesses today, SpaceX, Boring, Neuralink. They're all product engineering driven. He built them from scratch. Twitter is an advertising business, which Elon loads, like not loves. He loads it. He's not an advertising guy. And so he's going to have to move very quickly to find somebody who really loves the advertising business, because that's where 90% of Twitter's revenues come from, and find somebody that he trusts, who shares his vision to run the company. And so when people talk about overhang, they also talk about the distraction that Elon's going to be too focused on Twitter, where he should be worrying about, FSD and getting EV adoption higher and trying to get auto gross margins and more factories and stuff. So I've been against him buying Twitter from day one, as you know, Alexandra. I talked to you back then, even before he decided it. I just wish it was over. And once it is over, I think you're going to get a big positive reaction, whether he's told he has to complete it or not. My worry is they're going to appeal it. And so the appeal process is if she rules against him, it goes to the Delaware Supreme Court, and then of course it will go to the U.S. Supreme Court. And there's another rumor out there, for lack of a better word, that they may bring a cause of action in federal court saying that, accusing Twitter of fraud. I just want this to be over. And then so we don't have to have this thing noisy out there every day and us talking about Twitter instead of the EV business where Tesla is dominating.
I hear you, but I tell you, no matter what happens with Twitter, this won't be over. And I just want to actually play the clip of his answer to your question at the shareholder meeting, if you allow, Farzad.
Sure.
Yeah.
Let me
make sure you say share audio when you share your screen. There'll be like a little.
Let me see
mark.
that. Let me see that. Let me see that. Will I manage that? You tell me whether this works.
I can't hear it.
You can't hear that?
Mm-mm. Do you want to send me the link and I'll play it from my end?
It's actually a video that I
clipped out.
Can you stop sharing it? No.
Yep, I did. Yeah, so once you share the
tried.
screen, there'll be like a check mark at the bottom that says share computer audio as well. But I don't know if you saw that or not.
Let me try a second time, but if I don't manage, just let's forget about it. But anyway, what he said there, and I think we already discussed that one, Gary, is, he had this nearly love affair with Twitter, right? It was like how passionate he was getting it, but it was part of a puzzle that if he gets Twitter would advance by 2-3 years, or maybe it was 2-5 years, I don't remember exactly, what he wants to do in communications. And I think what he wants to do in communications will be bringing together academia, video production, chat rooms, and
wallets,
PayPal,
finance, right?
payment systems, whatever. I think there is a big picture of what he has, and he will build that anyway. Be it Tesla, be it SpaceX, be it Neuralink, be it whatever else he already has, this will come. And buying Twitter will just make it a quicker start, because that will be the chat function already, on which he will then add all the other elements he wants. But he wants to have academia in there. He wants to have video production, because YouTube needs a big competitor. There's no doubt about it. And YouTube has a lot of flaws. I mean, we can discuss that another time. But the payment function clearly comes into it. And I think that's why David Sachs was so much involved in this whole Twitter discussions as well. So bringing it all together will happen. It's just a matter is, will he start with Twitter or will he build it? But it will take his time and energy, because he wants to do that, and he will do it.
But as a Tesla shareholder, Alexandra, do you want him spending all the time doing that? Because it doesn't benefit you as a Tesla shareholder.
Yeah,
It'll
that's why I
benefit
want a
him.
second CEO, even though everybody hates me for saying that. Whenever I say second CEO, they all jump on me. And that's why I want somebody representing retail investors on that board, because I want Elon to stay there. The same way that he's still instrumental in SpaceX, yet is not there every day, he can be very instrumental to Tesla, yet not be there every day. I don't mind him having 5, even 10 companies. He has 10 kids. I mean, I don't know how he does it. I don't know how he did it with 5, right? But there's just so much you can do. But he has to put in Tesla the structure in place so that that can happen. That I agree with that.
If I could throw something out there, isn't there a signal with him buying Twitter that that bandwidth is available for him to take it on and that he has the structure set in place? How do you guys think about that?
See, I think it's a hobby. You know, he's an engineer, product guy. His core strength is that. I've studied Twitter. We've actually owned it. We don't own it today, thank God. It's a badly run company.
That's where we should have Ross here. I would have loved.
It's declining revenues and profits. It's not a well-run company, and it's not a great asset. And he's not an advertising guy. 90% of the revenues come from advertising. He can say, well, I want to make it more about user fees and stuff. Let me tell you, it's hard to get Twitter users to pay user fees to anybody, you know, whether it be content providers such as myself and others, or anybody. It's just that's not the way it was built. So I just think he's wrong in spending all this time and attention. I would much prefer him to start something from scratch, build the best product, and not have to deal with the sleepy Twitter culture.
Oh, it's all about users getting. I don't know how many Twitter users are there now.
220 million. But
exactly.
Elon's got 1.1 million, and if Elon were to move and start his own and build a great product that's much better than Twitter.
Well, see the example, million. Trump, that didn't work. See the example. That's not how it works.
Trump's he's a showman.
No,
Elon's an engineer. Elon would actually build it well. Look, I just look at Twitter as a bad marriage between two people. And I'm the asshole who's saying to Elon, don't buy it. You know, the best friend before the wedding saying, you really shouldn't marry this woman. Here's why. And he wants it. I don't know if it's because he wants to be a kingpin in the 2024 election, because it'll have a role, but I don't understand why he's
and that's already happening. You do understand that with him going up with DeSantis, Trump being upset, that's already happening.
Maybe I just don't think it has anything to do with sustainability and clean energy. To me, this is like a hobby for him. I don't understand as a Tesla shareholder why I would want him spending even 2% of his time focusing on Twitter.
Because it's about free speech.
Yeah, so from the perspective that I view it, and again, I could be wrong, but I think it's more than a hobby, because he's been speaking about it passionately, and the way that I've at least seen him interact, like think about ideas and grand visions, is that when he thinks something is existential in his head, that he wants to be part of the solution. And the way he views free speech and social media is that it's an existential threat to how civilization operates and talks to each other. And so he wants to be part of the solution. And if Twitter is going to be the accelerant for him to get that to that point, he's going to do it, you know? And I think what's interesting within the equation of Twitter, I wonder if Twitter is thinking about it that way too, and they say, okay, if this falls through and he decides to not buy Twitter, what's the likelihood that he starts his own company, becomes our competitor, and then puts us under in 2 to 3 years' time? Like, I wonder if that's a forcing function for them to settle instead of going to court and potentially losing.
Good point.
Right?
Good point. And the other one I want to add is, don't forget, we all love him and we all respect him, but he's the most hated man after Trump in this universe. Because just imagine the Tesla stock going up, him becoming a trillionaire. Can you imagine the Elizabeth Warrens out there going after him? How can we tax him? How can we then having a media platform that is there for the truth and that can just not distort it all the time is going to be very important for him. Very important for him. The more the stock rises, more it becomes important.
I think you're wrong. I think Trump is very hated. I think you have kids my age. I have kids, you know, in their 20s and in the teens. They adore Elon Musk, and you know, he's got already a platform. If he created his own social media company and started speaking, all those kids and young adults listen to him and they respect him because he's built this great company. Trump hasn't really built anything. He's a mouth, right? I think Elon can do anything. And if he started his own social media company, he would build followers and people would listen to him. That's my view.
Sure. And that's the alternative. And that's the alternative with which he's at the negotiating table. Now, one question I have, Gary, do you still think there is a deal possible before the 17th of October?
Yeah. Well, look, key date is next week, the 13th, and the lawyers yesterday alluded to this. That's when the special meeting is. The Twitter shareholders have to vote on the deal at 54.20. I think up until then, the board still has a lot, the Twitter board still has a lot of room to accept a lower offer. I think once the shareholders speak and say, and they will vote on this and they will vote in favor of it at 54.20, it becomes harder, I think, for the board to accept a lower offer. So I still think that's the most likely outcome, that there's some sort of a deal. But, they're running out of time, if you will. And the more this judge issues rulings, and she's been, pretty balanced so far, I think the more likely it is that Twitter's going to dig in its heels and say, you know what, we'll take our chances at trial, because this judge has shown that she's very pro-contract. She's part of the Delaware Chancery Court. Only once in its history have they overturned a deal based on an MAE. So I think they're going to take their chances if we get closer and closer to trial, and they've done all the work and done all the discovery. I think if there's going to be a deal, it has to be in the next couple of weeks or so, to be honest. But I do think there's a good chance there could be a deal. I'm just surprised that it's gotten this far and there hasn't been a deal, to be honest, because the spread between Twitter price, it's $40 today, it's up $2 today, and 54 is still pretty wide for something that, should happen in, literally October.
Farsa, do you want to take any questions from the audience, or do we have anything else on the...
There was one other. I think cash came up as a cash use was a topic that we want to hit. But if there is I don't know how much longer we got you for, Gary. 10, 15 minutes. Is that okay from your side?
Yeah.
Okay.
I mean, let me hit the cash question, because that's probably the number one thing that institutions ask me. Yeah. And let's be very clear, because there's a lot of confusion in the retail community. When people like me talk about what to do with the cash, they mean after all capital spending. So after all gigafactories can be built, because that's the highest IRR, internal rate of return, is to build new gigafactories. And everybody accepts 10 to 12 new factories by 2030. They cost between $3 and $5 billion each. That's the best use of cash. And people talk about it like after the Optimus robot, for instance. That's a capital expenditure. So when people say what to do with the cash, they mean after all the capital spending has been satisfied, what do you do with the excess cash, which I figure is going to be about $20 billion next year, growing to about $60 billion per year by 2020. This is amazing when you think about it, because in 2018, 2019, they were literally running out of cash. Okay, so you got really four choices. You can pay down debt, you can pay out dividends, you could buy back stock, you could do M&A, actually five choices, or you can let the cash build up. There is no debt to pay down. The debt's all gone. So that's take that off the table. Dividends, I'm not a big fan of, because once you put them out there, they're kind of rigid. They have to be paid out. You can't really cut them if you decide you want to do something. So I don't really like dividends because they're structured. That leaves you with buybacks, M&A, and cash build. Buybacks are opportunistic. You could put in a small buyback, let's call it 10 billion over 5 years. You could turn it on, turn it off. You could do it opportunistically, so that when the stock gets hammered because of some bad PR, you go in and you start buying it. To me, that gives the firm the most flexibility, and it's accretive. We went through the math before. If the firm is going to earn $8 a share next year, take $8 divided by 280, that's a 6% after-tax return, right? Versus the cost of debt might be 4, after tax that's 3. That's accretive in year one. And again, when you're thinking about it analytically, you calculate the internal rate of return on a buyback. So you got to go out 5 or 10 years to figure out what, that was the chart you were looking at before. What is the actual return over 5 or 10 years? So it's a very, very high return, but nowhere near as high as building a gigafactory. To me, the worst thing to do with the cash is just let it build up on the balance sheet at, maybe 1% this year, 2% next year. That would be a terrible use of cash, because it's not accretive. So I'm hopeful that they do some sort of opportunistic buyback. And, I don't know when that might be, but maybe after they get their investment grade rating.
Yeah.
Do you think this happens multiple times in the next, say, 5 to 8 years? Do you think this is a one-time event? How do you think about that?
Well, and again, the first one should be small. Just, do it once. Maybe you say, and, Leo Kogoin and I have talked about this by DM in the past, and he's a champion of it. And I know he's pitched it to the board. And again, I think it's a good idea. If you did 10 to 15 billion without specifying a time frame, you could do it in 1 year. You could do it over 5 years. But then at some point you run out because you use all your cash to buy back stock, and you got to approve another one, and it'll be bigger. So I think there's a couple of them, but I wouldn't start too big because that'll scare the rating agencies if you make it too big. If it's 10 to 15 billion and you say over the next several years, that's 2 to 3 billion a year. That's not much.
Yeah.
But
I mean, drying out the float will really help us. I mean, it still brings with it the whole issue of proxy votes, because obviously more you have institutionals, more you dry out the float. I mean, the stock will go higher, no doubt, and we won't complain about it. But then, like I said, the next subjects we'll have to address is ESG and all this political correctness when they ask their questions at the shareholder meetings. I don't know how you were sitting through that, Gary, with all these 8 or how many questions it was, where it was clear what was going to be voted. This is so ridiculous, right?
Yeah. Thank God I was standing in line near the front. Look, I look at other tech companies, and I consider Tesla a tech company, Google, Apple. Apple actually has a dividend, but Google does it right. They have a buyback. They buy back, I don't know, 2 to 3% of their stock each year. And, shareholders are very happy with that approach. And like I said, if you decide, because we're in a recession and we're not generating as much cash, or there's some deal you want to buy, or the stock price gets too expensive, you shut it off. You don't have to buy back any time. You can be very opportunistic. I just think that's the best of all worlds. Keep it small to start so the rating agencies don't freak out, and let the board get comfortable with it. That would be the best of all worlds. And you're going to get, if you get an investment grade rating and they're using cash to buy back stock, you're going to get a high institutional ownership. It'll be 60, 70%.
I mean, it would come from all sides and in masses, which is obviously what we're all hoping for.
Yep.
Good. Well, thank you very much, Gary. Any questions, Farzad?
Yeah, I was going to say maybe for the last 5 minutes here, if somebody wants to drop questions in the comments, go ahead and drop them. It looks like we have a couple already. Actually, this one's from Warren Redlick. He also has a YouTube channel. I've had him on my channel before. Alexandra, you know Warren well. Question: what do Gary, Alexandra, and Farzad think about possibility of $12 EPS for 2023? Now, we had Gary's chart up before. What do you think is the likelihood of $12? Yeah, so it would be what, 50%? Is that, how do you view that?
I think that's a stretch, but I'll let you guys handle that. I think my numbers are pretty aggressive relative to the street. Just so you know, the street for 2023 is at 583. And I'm assuming, as Alexandra pointed out before, 2.4 million units next year, which again means that Berlin and Austin have to do, I don't know, a couple 100,000 each. Fremont's got to do 600, and China's got to do, 1.2. That's how we even get to that number. If they were further along in getting a new factory up and running, like if something from Toronto got announced or Eastern United States, then I would feel more comfortable. But we're not there yet.
Yeah,
No,
I think it's highly dependent on how successful autonomy, full self-driving, recurring revenue is in the coming year, and that's really going to drive that, because that's going to be basically 100% margin at that rate. So.
But I guess that's a better question for you guys. Do you think that the take rate, which right now is, let's call it 14 in the US, 7 globally, does the FSD take rate go up if we get, FSD beta goes into full release by the end of the year? Do you think you get a higher take rate?
Well, what do you include? Do you only include the 15,000 up front, or do you also include the monthly subscriptions then?
Both. But the 15 up front, they recognize it. Half of it they recognize in the current year. So from an accounting standpoint, getting it up front is probably the most liberal. I mean, it's the most aggressive, way of forecasting earnings. If I use the $199 a month, it's only like, what is it, $2,400 a year, versus if it's 15,000, that's 7,500.
Is it $199 now? I thought it was $299.
$199.
Yeah, they didn't raise it, which is interesting. Some people say they raised it to 15 because they want more people doing the 199. Maybe.
Yeah, I think Elon said he would raise it once it goes. Everybody who bought FSD gets the beta. I think it might go up to $299.
I think the weird thing about the $15,000 price is, EAP is just 6,000, and other than recognizing stop signs and lights, and we'll call it city steer, EAP gives you just as much as FSD, almost, and it's $9,000 cheaper. So
yeah.
Now the pricing is off at the moment.
Yeah, I do think though that if it gets to a point where it's at level 4, say in the next year, and it's a true value add, like it's literally I get in my car and the car just takes me anywhere I need to go. I think that becomes a gigantic lever for Tesla to pull for its existing fleet, because everybody who owns the cars today can more than afford that. It's just a question of, is it going to make my life better? So I think that's where, if the proof is in the pudding, then all bets are off.
You used to work there. When do you think that'll happen, where you just get in the car and the car drives itself and you don't even have to sit in the front seat? You could sit in the back seat and read a book. When do you think that'll happen?
I think there is a possibility late next year.
Really? Okay.
I think so.
Without additional hardware or moving, to your point,
I think so.
Cameras to the front, in front of where they are now, in front of the B pillar.
I think so. Yeah.
What about you, Alexandra? When do you think?
I'm much more reserved. It freaks me out. I had it on a monthly subscription, but I'm a complete chicken for everything when I don't control it, right? I don't know whether it's the female or motherly thing in me, but I'm sitting in that car and it freaks me out when it's driving by itself. I can take it a while, but as soon as it does anything slower or different, then I want to have it. So I canceled my subscription. So I'm quite negative. No, not negative. We had this discussion with Warren. He's probably going to laugh about this now, but I have a very bad view on administrations, and I think if they can delay allowing full self-driving for Tesla as long as they can, they will. I think NASDAQ and all those entities will just make it very complicated. It may roll out state by state. I hear all that. But it really, for me personally, it has to be to the level where everybody tells me it's working now, then I try it again. I don't want to spend money for something I feel uncomfortable about, and I'm very open and honest about it. Love everything Tesla, but this thing still freaks me out.
Yeah, and let me clarify real quick. So I do think Tesla is going to have the technology ready, and they're going to show it by late next year, where if I did want to sit in the backseat, I can. The regulatory question is a completely different one. So let me just make sure I make that clear. Go ahead, Gary.
So Alexandra, you're closer to where Chuck is than Omar is in terms of the beta testers who post a lot.
Yeah. Right? Yeah. No. I understand I'm not very positive on it, but it's just that's why I'm actually so much more positive on the bot. The bot needs nobody's authorization to function and be sold, right? And that's why I think there's much more potential getting quickly somewhere with the bot than with FSD. But I mean, I may be positively surprised. And I completely admit this is just me sitting in that car being afraid of pushing the button and letting it do its thing.
We'll do one more here as we're coming up on time. This was actually a very interesting question. Does Wall Street give Tesla any credit for SpaceX's lead in aeronautics engineering, i.e. they can land rockets, so maybe they can solve FSD? It doesn't seem Wall Street cares about SpaceX innovations, and obviously Elon leads both. How do you guys think about that? Do you think they don't get the benefit of the doubt, or should they even get the benefit of the doubt when it comes to that?
No, Wall Street doesn't pay attention to it. And sadly, because you're right, to be able to shoot a rocket up and then land it on a little landing pad in the middle of the ocean, that's quite a feat. But I don't think Wall Street really pays any attention to it or gives any credit for that ability to do that. I think once you see the regulators say, okay, FSD is a level 4 tool, then I think people will automatically give them credit and they'll put more valuation in for Robotaxi. But until that, they're not going to pay much attention to it. That's my view.
I agree. I completely agree. And the same for Neuralink, boring tunnel. That's peripheric for them. There's nothing they can take for Tesla. Wall Street has to look at hundreds and hundreds of companies. I mean, Tesla is obviously a very controversial one and people have an opinion on it. But if you think they will then add SpaceX or whatever to it, I just highly doubt it.
Look, I give Elon and Zach a lot of credit. They have not tried to move forward and put the 4 companies together, which Wall Street would have a fit if they did that. And again, I give Elon a lot of credit for not having Tesla make the bid for Twitter. He did it himself. So, that's the right thing to do from an institutional standpoint. But I would not want to see them put all those, the other companies together under the Tesla umbrella, because it would cause the earnings to go down and people would put a lower PE on it.
Yeah.
Now, before you close, I have one more. That. And that's, I mean, in a couple of weeks, in 3.5 weeks, we're going to have the numbers for Q3. And I just want to win again, right? Because I always want to win. You all know that. Yeah. So I want to take 385, and you now tell
Ooh.
me under or over.
Okay. Trying to see what my model shows. I'm going to take 37. I'm going to take 370. And just, what the street is? The street is at 357. Not that
Yeah,
matters.
okay.
So if
Yeah.
the number on October 2nd, which is when they'll announce this, is above 360, you'll win. The stock will go up. And so, as you know, I try to keep it conservative because I want to win too, and I want the number to be above my number.
So let me ask you
Now let's
clarifying
keep
questions.
pausing.
Is this deliveries or production?
There's deliveries.
It's deliveries.
Deliveries?
Yeah, Wall Street doesn't look at production per se. Deliveries is the number that goes through the P&L. It's what drives revenue and earnings.
And I mean, give
Yeah.
me. I'm going risky, right, with 385. So Farzad, what's yours?
Oh man. So my gut tells me 375 to 380, but I'm going to be optimistic and I'm going to say 386. So I'm going to go
Wow.
over.
Oh, I love you.
How about
Well, I'll be
that?
at 384. So, Alexandra, I'll be at 384. We'll box you in.
Watch it come in at 385. It'll be incredible.
I want you to pull up that comment from Emmett, please, if you can still find that Farzad, because
Where
that
are
was
we
so
at?
cute.
Let me
It was
see.
about, I don't know, 3-4 minutes ago.
Let me see. Emmett. Where are you at, buddy? Emmett Peppers. Do you have a timestamp on it, Alexandra, by any chance?
No, I don't know. It was not far. It was not far. He said we should do this on a monthly basis because this really was a great flow. So
Yeah, I would
wish
love
you
that
would
if you guys
pull
are
that
up for it. Yeah. Of course I'm going to say yes.
Do
Obviously.
it again.
Yeah, I love
And
that.
the other thing I wanted to tell you is that Ross reached out and it was at 10:29. Ross reached out and he would like to join us once, Gary
Talk
and
about
Ross
Twitter?
together.
Okay, we could do
Yeah.
that. I'm going to go see Ross
That'd be
for
awesome.
dinner in a couple of weeks, so maybe we could do it from there.
Oh, you're coming to California. Good.
Yep. And can I ask one more question since it's timely? So what do you guys
Yeah, of
think
course.
of the fact that the wait time in both China and the US has been slashed by, roughly half?
Oh, you know what happens, right?
Is that a
In
good
both
thing or a
countries.
bad thing?
Well, first of all, in China, obviously production is now much higher.
Yep,
We're going to
yep.
make 100,000 this month. I'm even more confident on 100,000 than on my
Yeah.
385. But in the US, why did they do that? Because there's so many people delaying for next year because they want the 7,500. So they are pulling now an earlier window so that people who want a car suddenly have an opportunity to get a car again and want to have it before the year end. So they try to motivate those that are eager to have a car.
So what does Tesla do to encourage people to take delivery this year? Do they throw in freebies like free charging?
I think so.
and
End of
stuff like
quarter.
that?
And end of quarter, I think that's what's going to happen.
So
I mean,
you-
we've seen that a couple of times already.
So you
I'm
think-
very positive about that. I think that will help not to have this dip now in Q3 and Q4 of deliveries, just because, in the US, there'll be people saying, and I have a couple of people reached out by DM to me saying, oh, I really want to wait now for January. But so we need to understand, and I don't know the answer yet, will Tesla put those that now suddenly, instead of accepting September or October, say, no, I want it later, will put them really very far out so that these people get discouraged to delay? Or will they give them freebies to do it? They already would have a higher price if they put in a new order. These people usually ordered at lower prices, so they have an incentive to take it already. A new order would cost them more today.
Okay. So if I give you 4 reasons, the EV credit, which you mentioned, more production, we'll say higher prices because they've really raised the prices of both Model 3 and Model Y, and then just recessionary pressures. You think the EV credit is the biggest reason that wait time has dropped?
And I mean, Shanghai, the production increase. Yeah, but
In the
but
US.
here in the US, yes. In the US, the EV credit.
Okay. I hope you're
Yeah.
right. Because that's
I would
manageable.
have to agree.
You can just give freebies out to encourage people to take it earlier.
I mean, and I do think Elon has openly said that he views the pricing to be embarrassingly high. So I mean, he could just pull the lever and lower pricing and forget freebies. Just actually get it to where it is. Especially
No.
if
I
you don't
want
think that's-
my car margin to stay where it is.
I agree with Alexandra. I would rather them give free charging.
Don't
and
you lower that price?
Okay.
give free FSD, free charging, whatever you can give free
I mean,
for 6
they
months.
have so much stuff which is tick on a button which costs them nothing and they sell for thousands, right? I mean, come on, free supercharging, upgrades, even a couple of months of free FSD if that's what you want, right? And it costs them literally
Zero.
nothing.
Yeah. And
So
that's what they'll probably
don't
do.
start lowering the price. No.
I agree
But
with
what
you.
if there is actually deflation in the channel though? Like, don't you think they just pocket that margin? You don't think they pass it on when it comes to supply?
I think they pocket. I think symbolically, if they start cutting price, it just, I don't know. I think that looks odd because nobody else
Sends
is
the wrong
doing that.
signal.
None of the other manufacturers.
They all need the
are
money.
doing this.
Yeah.
So,
Okay. All right. That's fair
all
enough.
right. Thanks, guys.
Thank you guys very much. Thank you so much for
Loved
coming
it.
on.
Thank you,
Appreciate
Gary.
everybody listening. So great. Gary, you should start a new podcast with your mic, man. You sound great.
And
And
then
my background,
everything's
my future
perfect.
fund background.
Hell yeah. The Future Fund podcast
Thank you,
featuring Gary
everybody.
Black.
Loved it.
Thank you, everybody.
Farzad.
We'll see you around. Of
Bye,
course.
guys.
My pleasure.
Okey-doke.
Thank you, everybody.
Bye-bye.
That was awesome.